Hi, my name is Justin Brown. I'm the Director of Investments here at Greenspring Advisors and lead Greenspring's Investment Committee. Today I'll be sharing highlights from the fourth quarter and recapping 2024. Coming off a very strong third quarter for major asset classes, the fourth quarter saw a lot of movement in stock and bond markets as the market reacted to the election, the Federal Reserve's anticipated monetary policy, the path of interest rates, and ongoing geopolitical risks. So where did things end up? The U.S. stock market led the way, gaining 2.63%, while international developed, emerging markets, and global real estate all posted negative returns. In the bond market, U.S. bonds lost value as interest rates rose throughout the quarter due to shifting expectations that the Fed may keep rates higher for longer. However, global bonds outside the U.S. were up 0.74%. Demonstrating the benefit of maintaining a globally diversified bond portfolio. With 2024 now wrapped up, I wanted to reflect on the year to examine how the market performed and what we can take away coming into 2025. Throughout 2024, as is with every year, there was no shortage of negative news headlines that could cause investors to worry. From starting the year with headlines about rising inflation, to all the headlines and noise surrounding it being an election year, to fears about the job market and concerns about the economy. If you didn't know any better, you would have thought it must have been a challenging year for the stock market. But as we zoom out, we see that these headlines, while attention-grabbing, neither explain nor predict market performance. In fact, 2024 was an exceptionally strong year for investors. This chart shows the cumulative return of the U.S. stock market and that the U.S. market delivered nearly 24% returns, rewarding investors who stayed invested throughout the year. This underscores the importance of viewing daily events from a long-term perspective and avoiding investment decisions based on near-term headlines. Continuing to look at performance for the entire year, but taking a step back to look more broadly across all asset classes, this table re-emphasizes that 2024 was a strong year for investors. The U.S. market led the way, up almost 24% as I mentioned earlier, but investors were also able to add value to their portfolios from international developed, emerging markets, and global real estate, which were all positive for the year. In the bond market, global bonds led the way with a return of nearly 5%, but both U.S. and global bonds delivered positive returns for investors. As we enter the new year and we look ahead to 2025, predictions about what the market will do seem to be everywhere. But this is nothing new. Every year, analysts and strategists try to forecast market returns. We encourage you not to get caught up in these predictions, as history shows they are often wrong. For example, this chart highlights predictions from leading Wall Street strategists for how the S&P 500 index would perform in 2024. Notice how varied they were, with the most optimistic predictions from Oppenheimer, Fundstrat, and Goldman Sachs forecasting positive returns near 7%, while the most pessimistic predictions came from JP Morgan, predicting markets to lose 12%, or Morgan Stanley anticipating around a 6% loss. Despite all the time, effort, data, and opinions that these firms utilize in forming and publicizing their predictions, not only did they come to widely different conclusions, but they were also all incorrect. The S&P 500 delivered a 23.3% return for the year, which is well above its historical average of 12%, and far exceeded every single prediction from this chart. So what can we take away from this? Well, for one, expectations for 2024 were unusually low, with everyone's prediction being that the S&P would underperform its historical average. What we see is these predictions differed significantly from reality. When it comes to predicting where the S&P 500 or any index or asset class will end up in 2025, history tells us no one can reliably predict this and is essentially just guessing. While I'm not one for making predictions, the one prediction I will make is that 2025 will surely bring no shortage of events and surprises of its own, because that's how markets work every year. Fortunately, we design portfolios to withstand a variety of market environments. Our investment approach is rooted in data and evidence, not speculation about what might happen in any given year. History shows that those who can zoom out from the daily noise and stick to their investment plan are the ones rewarded in the long term. On behalf of the investment committee here at Greenspring Advisors, thank you for your time today. As always, feel free to reach out to us with any questions.